Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Cheers, everybody, and welcome back to the Investing Podcast presented by Tusk Media. This is my Morning Market Mimosa, and this is your Morning Market Mimosa. We're happy to be here. It's Wednesday, June 16th, 2016. We poured a little extra champagne in this OJ today because we're celebrating. Futures are up just a little bit, so we're really excited about that after 4 consecutive down market days. The Dow is up about 0.25%, up 27 basis points on a futures basis. Meanwhile, the NASDAQ and S&P 500 are both up 22 basis points. So that's certainly a welcome sign. It's good to see some green on your screens even before the market opens today, and that's good news. A big reason for that good news has to do with Europe. The UK in particular, UK stocks are up about 1%. So some good growth there despite the unknown results of a vote that's still looming about the Brexit. We've talked about this on the podcast all week. So go back and listen to previous episodes. But there's a lot of uncertainty as to whether the UK will leave the European Union. But despite that uncertainty, investors came out to play on Wednesday. Stocks are up 1%. That's good news. It's starting to trickle over to the US. So we're happy to see that. A few individual stocks to highlight in the pre-market, and then we'll get out of here. Best Buy is down almost 2% on a downgrade from Credit Suisse. We've talked a good bit about big box retailers versus online retailers like Amazon. And it looks like that story is continuing to put Best Buy on the losing side. So Best Buy may not be a great buy right now. Celgene announced a big stock buyback, a $3 billion share buyback. Stock is up about 1.2%. We've talked about share buybacks before, but the illustration we use is this. When you buy stock, you're buying stock because you want to participate in the good things. You want to participate in the earnings, in the dividends, all the positive impacts of a company. That's why you invest in stocks most likely. We use those good things in an analogy. We refer to them as cookies. Think of a cookie jar. When the company comes in and buys back shares, that means fewer hands are reaching into that cookie jar. So in theory, those hands are able to access more of those good things on a pro rata basis. So that's good news for Celgene most likely. We will keep you posted on that stock throughout the day. Last thing we're going to talk about is a pro tip. Pro tip for the day. This is something you can take with you. You can apply it to your life today. The Journal of Social Influence has announced, and they did a big study on this, that a 2016 study found that people who shop at luxury retailers are less likely to help those in need. So the pro tip today, folks, don't be a jerk. I don't care where you shop. Don't be a jerk. Help people that need help. Have a great day. Leave a 5-star review. Hit subscribe. We're going to be back with the Stock Market Power Lunch. We've got the Investing Happy Hour coming at you. And guess what, folks? Number 4 today, we've got a long-form interview with a guy that runs a site called The Distilled Dollar. So check that out tonight. I think you'll really enjoy it. Hit that subscribe button so you make sure you get it. All of our content is available in audio form on iTunes, Spreaker, and Stitcher. If you subscribe to our video podcast on iTunes, you'll get our most recent market updates. But that's it. And then all our videos are available on the YouTube archive. Again, we've got Bond Week coming up June 27th. If you got any questions about bonds, shoot us an email. Email is right up here to my left, but it's theinvestingpodcast@gmail.com. Theinvestingpodcast@gmail.com. Talk to y'all soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.